Welcome back to my channel, Credit Recovery, where we talk everything about credit and getting approved for credit. Today, guys, in for another treat. Doing more reactions here to go ahead and clear up some misinformation as usual. And before I go ahead and get started, anybody that I do a reaction on or correct their the information about credit, please do not take it personal. Like it's not my intention to hurt you, I guess. It's just more of I just want to clear up the information to make sure that, the information that is out there is all correct. Because again, we all have a mutual goal, which is trying to educate people about credit and about being approved for a loan. So yeah, so anybody again that do a reaction, it's definitely not my intention to point out those things. So, I'm just here more trying to educate. So let's go ahead and get started with our first video. All right, so this one, this guy's talking about Navy Federal pledge loan, which I didn't know exactly what that actually entailed, and then we found out it's just a secured loan backed by a certificate of deposit loan. So let's get in here. Got some great stuff to go ahead and learn. So let's do this.
If you don't have a Navy Federal Pledge loan, you're gonna want one after this video. What's up, winners? My name is Nam. If you're new here, welcome. Here we talk all things personal finance and credit. Start now by subscribing so you don't miss out on any future videos. You might have seen this topic on YouTube before if you're interested in building credit, and everybody tells you that you should get a pledge loan. You may be thinking to yourself, maybe I'll get a pledge loan in the near future, but I really don't think that most people fully understand what a pledge loan is and how it can have a positive effect on your credit score. In some cases, you can essentially create your credit profile overnight. So in this video, I'll give you a full breakdown of what a pledge loan is so you can fully understand it and use it to its maximum potential. We're gonna talk about strategy, what it looks like, and all the legal details that come with Navy Fed. I think for most people out there, if they have heard of a Navy Federal pledge loan before, they just think it as a credit builder account. But it's way more than that. I'm gonna show you why it does not matter if you have good or bad credit. This is even more powerful if you have good credit, because this can fan your credit profile even more. So if you are an individual who are seeking high credit funding or looking to leverage credit, you can literally manufacture a loan which shows on your credit report that shows that you have tens of thousands or even $100,000 loan. Now, if lenders see that you had loans up to 50K or even 100K, they're gonna be more likely to offer you higher lines of credit, larger loans, and better financing options. So with that said, this will help you across all financial institutions, but especially if you are a Navy Federal member, you're gonna get way more brownie points. Because with this type of strategy that I will be sharing with you, there's a huge difference between having a great credit score and having a great credit profile. Yes, having a great credit score does reflect your credit profile, but the credit profile is the details. This is similar to what a Carfax is to a car. So if a lender looks at your records and they saw you've had large loans that are paid back on time, lender is gonna be like, damn, this person is legit, they are trustworthy, and they will pay me back. Because the key here is to really fan your credit profile. The trouble with most people when they're trying to seek lending is not that the credit score is not high enough, it's just that they haven't really built a solid profile. Yes, they probably have credit builder loans, consumer finance loans, auto loans, or even a couple credit cards. This will add diversity to your account, but if you're trying to get much bigger amounts than you're used to, then a large pledge loan will help you do that. Because if you were to think about it, credit builder loans generally do not have that high of amounts. Usually it's anywhere between $500 to $1,000, and even most of the time people have large loans such as student loans, they're in deferment or the balance is still too high. This just shows that you have a large amount of debt, which ruins your debt to income ratio when lenders are underwriting. Now in this video, I'll discuss in detail about the Navy Federal program, but there are plenty of other financial institutions and credit unions that offer similar products to Navy Federal. So if you are not in with Navy Federal yet, I do have a playlist right here, which will teach you all the steps. So if you still don't qualify, check out your local credit unions because most likely they're gonna have something similar. So in a nutshell, this is how a pledge loan would work. Let's just say that you want to get a $50,000 loan. You would have to deposit $50,000 into your Navy Federal account, and then you would have to call them up and be like, hey, I want to get a pledge loan with this 50K that I have sitting in my bank account. They will set you up with a loan using your own money, then they will charge you just a little bit of interest so they can make some money on this trade line. This is just the cost of business, and you gotta put some skin in the game if you want to play this credit game. Once they take that money from your account, that loan amount will go.
It's just not a little bit of interest. Again, it varies based off your credit score. So if you have a really credit score, then your interest rate's gonna be really high. So I wish you would clarify that, Let's get back to
right back into your bank account. Now let's take a look at this document that's directly from Navy Federal that discusses certificate pledge loans. There are variations to this, like a share security.
let's see. You guys can't really see it well, but yeah, this is pretty much a certificate of deposit. What a certificate of deposit is pretty much you put a money into a special account with the bank or the credit union, and you earn interest on it. And normally the interest is not really that high. Right now it is high because inflation is really high, but once inflation's back down, you'll see that it's not really a great way to it. It's a way to be able to invest, but is it the most optimal way? Don't know. Don't know. I'm not a financial advisor, so I definitely won't speak on that. But credit, I definitely will speak about. So yeah, this is just pretty much what it is. It's just pretty much an outline of what it is. Not really much information about, you know, how to get approved for it and whatnot. So let's say if he goes a little bit more depth into that.
loan, which can be for small amounts with varying lengths, but for this video, I'll just go over pledge loans. So based on this one pager, it says that this program allows you to borrow your own money. Use the principal in your Navy Federal certificates as collateral on a low interest rate loan. The loan's APR is just 2% points higher than the certificate rate, and the certificate continues to earn dividends at the rate at which it was purchased.
My dad was a hard worker. He used
Hello, sorry, let's go skip that.
Familiar with what certificates are, imagine a savings that is locked. So you would have your money locked away, which you can earn interest on, typically at a very small percentage rate, but it's better than nothing nonetheless. So for the eligibility for this program, you gotta be at least 18 years or older, and you can also be the sole owner or a joint owner of the certificate. This is very powerful in the case that you wanna build your spouse's or family member's credit as well. They have short-term certificates, which can range anywhere between 3 to 12 months, and long-term.
That's it for the eligibility. Okay. Let me not judge him right off the bat. So, yeah, let's go back to it. Let's see if he addresses that.
Certificates, which can range anywhere between 3 to 7 years. You can also take out a loan ranging from $1,000 all the way up to $100,000. This is the essential key when it comes to building your credit. The larger amount with the longest terms will benefit the most. I'll go over what you need to know to make this as low cost as possible with the best outcome a little bit later. One thing that they did not go over in this handout is that you will not incur a hard inquiry whatsoever. You will most likely get a soft pull just for identification purposes, but these are harmless. So that's the meat of this one pager. So before moving on to the strategy and the hack which makes the pledge.
How do you know that there isn't an hard inquiry anytime you apply for any loan? Actual like loan, yes, you will incur hard inquiry. So definitely let me know what is your name? Mabe. Name? I'm sorry if I mispronounced it. But definitely let me know because I do have a curiosity of how do you know it's not an inquiry on your credit? I was like, definitely hit me up.
So powerful, I would like to thank today's sponsor, Bankrate. If you are in the market for actual dollars in your rate, there's an affiliate link down in the description. So here's the strategy. Ideally, you want to put in as much money as you possibly can aside for this pledge loan. Because the goal with the pledge loan is that the larger loan that you can take out or cash that you have available, this will be the amount that will be reported to the credit bureaus. So if you ever wanted to seek higher levels of funding, the amount that you take out as a loan is really going to play a factor. For instance, let's just say that you wanted a $50,000 car loan. If you only ever had $1,000 or even $5,000 loan, this will make it seem like this was the most that you're able to handle, or you just have a thin credit profile. In this instance, you may not get the most favorable terms, or you would have to put down more money for a smaller loan. But on the other hand, if you have a $50,000 loan with perfect payment history on your credit report, lenders will know that you're able to handle large amounts. So for instance, I was actually thinking about getting a 50 or even a 100K Navy Federal pledge loan just so I can build a thicker credit profile. I understand that everybody's financial position is a little bit different, so if you only have $1,000, then go ahead and just do that. But the key with this pledge loan is that you want to have a large enough balance with a long enough payment history. Alright, so once you decide how large of a pledge loan that you want, you would then want to place this money into your Navy Federal account. Then you would have to call Navy Federal and tell them like, hey, I have this money here and I want to have a pledge loan with the amount that's in my account. Once you start this process, they'll put that amount on hold and create an installment line of credit using the amount that you set aside. Then within a few business days, they would then give you back that amount into one of your Navy Federal accounts. This either can be a checking or a savings account. So for instance, let's just say that you're a baller and you want to have a pledge loan of $100,000 for 7 years. Once this process gets approved, this information will get reported to the credit bureaus in the next 30 to 45 days, showing that you got a loan for $100,000 with the ending date in 7 years. Now, here's the actual trick to build your credit the way that you want it. There are varying numbers on the internet to tell you how much you want to pay off, but the general consensus is that you want to pay about 90% of this loan off right away. So when I say pay this off right away, I would wait until this trade line actually reports to the credit bureaus. So this can take anywhere between 30 to 45 days. So once you've seen this reported to the credit bureaus, this is when you would pay off that 90%. So this may drop your credit score for the short term, but you want to make sure that this trade line actually reports before you pay 90%.
I like that he did that. He let you know that once you take out this loan, your credit score is going to dip. It is going to dip because what's going to happen is that your amounts owed, which counts for 30% of your credit score through Experian, can't remember through TransUnion, Equifax, but we'll just use Experian for now. So that counts for 30% of your credit score. So it's definitely going to dip. So I'm happy he gave that disclaimer. That's what I'm talking about, baby. That's what I'm talking about. And also, I see that you military behind. Thank you very much for your service and everything that you've done. Doesn't matter how small of role that you did in the military. Thank you for serving our country. Definitely do appreciate it. Wanted to get that out of the way. All right, let's get back to it.
Of it off. So in this example, the $100,000 that you have, this will mean that you would have to pay off $90,000 of the loan that you took from Navy Federal. Then you would leave that $10,000 balance across 7 years. So if you are thinking that you are actually spending $90,000, you are actually not, because this is your money to start with. The $90K will be going to Navy Federal, then right back into your account. You're essentially just moving money from one pocket to another between you and Navy Federal. So across 7 years, you would have to pay back $10,000. Again, every payment that you pay back minus the interest gets released back to you. So that $10,000 is still yours, minus whatever interest fees that you would have to pay. Now you may be thinking, okay, if I took out a loan for $100K, why not just pay off the $100K right away? This way I would have a $100,000 loan on my credit report. While you're not wrong, but the largest factor in your credit report is your payment history. This accounts for 35%. So you may be eager to pay this loan off right away so you can just show that you had a $100,000 loan reporting, but you want to make sure that you've had this loan open long enough for it to actually affect. Ideally, you would want to have this loan open for at least 13 to 18 months just so you can show that you have a long enough payment history. Now, if you were to pay off 90% of this loan,
I don't know. I beg to differ. Why? Because again, this is what I do. Depending on how your overall credit looks like. So if you're a person that has like already like 5 to 7 years of great pay history, that's oh okay. What I mean is just you just paid the loans on time. But if this is like your first new highest loan, then you're gonna want to have it on there for at least 2 years because that is what we can see on our end as underwriters is that we're able to see that 2 year history when reviewing your credit. So I wouldn't definitely, if you are going to definitely follow what he says, I would definitely go at least 18 months, but ideally at least have it for 2 years and then get rid of it. Just because that's enough to establish pay history when it comes to getting loans. Like you don't need to have this loan for. I think he mentioned 7 years. That's really long. Like you don't really need to have all that. That's a lot of interest within that 7 years. So I would say if you want to do it at least 2 years, maybe pushing it, maybe three. Because you got to remember when you go to get a term, mostly what are the terms you see? You see 3 years for cars, 4 years, 5, 6 years for cars. So it's that. So it's just that. It's like if we see like a loan like that and it's been paid off the term, we're like, okay, he could seem to handle a 3-year loan or 4-year loan. So the payment history is definitely gonna be very important. So definitely don't take it really lightly to do between, I think he said 13 and 18. Don't do that. Go for 24 months. All right, let's get back into this video.
Your monthly payments should be very small for the next 7 years. So let's run some numbers here. This is going to be very general numbers. I'm not going to include the interest just for simplicity, but if you were to take out $100,000 for 7 years, your payment will be roughly around $1,200 a month. Now, if you were to pay off 90% of this loan, a $10,000 loan across 7 years will cost roughly around $120.
I also forgot to mention, by not having this loan really open for very long too, it will also go ahead and affect your credit age because once you pay off a loan, ends up tending to dip your credit score because you paid it off. So exactly, you want to make sure that this installment loan is worth it. So that is something also to keep in mind that your credit age can go ahead and be affected by it.
A month. So once you paid off 90% of this loan, depending on how your payment will be calculated, it is possible that your next payment that is due will not be until years in the future, or it can just be adjusted to the new amount. The idea is not to pay off the loan early so you have a long enough payment history. So the reason on why this works is to first understand how the loans affect your credit. The two biggest factors when it comes to loans affecting your credit will be your payment history and the amounts owed. The mix of credit is also a factor, but the biggest factors will be payment history and the amounts owed. Believe it or not, loans have their own utilization. We all know that credit utilization is important and you want to keep this low, but this also applies to loans as well. Normally, whenever you get a new loan reported to your credit report, you generally see a dip to your credit score. The reason this happens is that one, usually a hard inquiry occurs, and second, you have a large amount of debt added to your credit report. You tend to see your credit score the highest when the
See what I mean? A hard inquiry incurs. Like whenever you get a loan, hard inquiries occur. So he just kind of contradicted himself because that's what he said earlier in the video that there's no inquiry. So again, clear it up in the comment section. I would definitely like to know.
loan is almost paid off. So if you were to take out a 100K pledge loan and if you were to pay 90% of it, this will show that you have a 10% utilization from the original loan balance. You also need to know that loans affect your credit score much more when they are open. I'm not sure if you experienced this before, but you tend to see your credit score drop once you paid off a loan. It should be recovered in the next couple of months or so, but it may not
How
be
do
as
you know
high
that?
as it once was when the loan was almost paid off. So far, I told you what a pledge loan is all about, how to implement it, and why it works. The last thing I gotta cover is that why in the world would you ever want to do this? Don't you think it'll be much easier for you to get larger lines of credit, loans,
Okay. Oh, that is it. Wow. I I personally, this is my opinion, by the way. I don't think he said enough information about this. He missed so much in this video, and and this is just like what I'm talking about. It's just make sure you provide um accurate information when it comes to this. So this is something he didn't address. He didn't address DTI. So what is DTI? Debt to income. Essentially what debt to income is pretty much a ratio of a percentage that underwriters use to determine if you can repay back the loan, because that is a very important role when it comes to getting a loan, is your ability to repay the loan. It's very important. That's the whole reason we're trying to give you a loan. You got to make sure you're able to do that. So if you have a lot of money that's going to your debt, essentially what happens is that then you can get declined. I was like, I've seen it go as high as 55%, but that was with someone that had a 700 credit score. So it's like, well, that's something that's very important to get, because if we're trying to go for $50,000 pledge loan, like he's trying to explain, like you don't make enough money to be able to repay the loan, it's going to be really hard to scale up to get 50, 75, or 100,000 on your credit report if you can't repay it. So that's something that's very important to remember when you're trying to get for this loan. I was like, gotta find this out, but let me pull up my calculator so I can go over like a small little demonstration of how to calculate your DTI and what it looks like. Okay, let's go back over here. All right, so I'll keep it simple. So let's see if there was a person that made $3,000. Well, let's say if in their debts they pay $1,000. There we go. So it's your debts divided by your income comes up with the ratio. So let's say if you pay $1,000, and this is stuff that reports on your credit report. Remember, this is only stuff that reports on your credit report. So any utilities, car insurance, Netflix subscriptions, this doesn't go in there. It's just credit card, auto loans, personal loans, mortgages, anything that calculates. Pretty much you add it up together and enter it there. So once you go ahead and do that, so let's just for example, there's 1,000. Let's see, his gross income is 3,000. This should come up to 30%. Let's see. All right, 33 point 3%. So essentially, yeah, so anything that's from the zero to the right is pretty much the ratio you're looking at. So if it was at 100%, there would actually be a 1.0. That's how you know it's at 100%. So their DTI is pretty much at 33 percent, and that's how you calculate it. So that's what I mean that he needed to go ahead and explain when it comes to debt to income, because that is a factor. Um, let's see. He also didn't go ahead and go over credit experience. That's also something very important. Only because you have $50,000 loan, and you put it up against a pledge loan or secured loan using the cash, doesn't mean you're going to be approved for that. Because again, in order for you to get approved for it, you have to have at least the experience to be able to handle a payment that size. Because again, that's what they're doing. They give you a loan off they're giving you a loan payment based off that size. So if you've never had a $50,000 loan, it's going to be kind of hard to scale. So credit experience is possible. So like let's say if you only had a 5,000, definitely try 10,000, and then every couple of years, getting what's that 2 year history on there, just keep scaling up higher and higher. Because again, you can't just go in asking for 100,000 if you've never had experience with that. That is something within the underwriting community, especially with consumer underwriters. We never want to be really the first people to give someone a loan that they've never had before, just because there's so much risk. But yeah, that's something very important that you gotta that he should have touched a little bit more base on, was just the credit experience. He also didn't go over the credit score requirements, which is again very important. Only because you have this money doesn't mean that you're gonna be approved for the loan. Because again, it's a loan. There are requirements that you gotta meet in order to get this loan. So if you have a 400, 500, or even 600 credit score, then this isn't gonna work for you right away. You gotta work on your credit, um, to go ahead and get it built up. So I would definitely call your loan officers at the banks, credit unions, or financial institutions, and just be like, "Hey, what's the minimum credit score?" Okay, great, bet. I'm gonna work to get that credit score, because again, I was like, that's still a factor. Your credit is still a factor because they're giving you a loan for it. So I wish you would have definitely gone over that. He didn't go over employment. That's something also very important. It shows stability that a person is receiving income on a regular to be able to make the payment on the loan. You see how this is like slowly starting to connect. You got to be able to have the money to repay the loan, and then you have to have stability in the job. A person that's just jumping around, left and right, changing jobs, being at a job for 8 months, being there for two, then switching, going for job for 12 months, being at the next one for 5 months, that really shows instability to us underwriters, because like you can't hold a job, so how do we expect you to repay that? So definitely having income. When it comes to consumer, they're a little bit more lenient, so I would say anything that's for like 6 months of job history, you're good. A year's ideal, 2 years phenomenal, though we love that. Um so that's something he does touch on, because again, we need to be able to make sure that you're gonna be able to continue to paying this loan for the 7 years, like he went ahead and explained. So let's see what else. What else? And then on the flip side to the debt to income, remember, by getting this loan, this is going to increase your debt to income. So if you're going to be purchasing a home soon or purchasing a vehicle, or maybe your car breaks down and you want to get a loan for a vehicle, this loan is now going to be counted against you for your DTI. The only time that it won't count against your DTI is if um there's a secret right here. So if you owe less than 10 months on a loan, you can get away with it in the consumer for them to remove that payment and not count it against if you have 10 months left. No, now, if you decide to apply for a credit card, even again, it's going to take into account all these factors when it comes to when it comes to approving you for a any type of loan. So now you have this showing on your credit. So again, be worry about this. If you get this type of loan, just make sure that you're not going to go ahead and be having any any other loans you're going to be getting in the future, because this big payment is going to hinder you from getting approved for other loans. So that's a very important. Let's see. How essentially how I would sum this up. If you really want to do this, if you have okay to okay decent credit, so let's say if you have pretty much a 670 and above, I would just honestly just apply for unsecured loan and then put that money, pay off 90%, and then just put the money in a bank account and have it go for 2 years and on automatic payments from a separate bank account, which you don't have access to. Just let the payment come out every 2 months, or not two every 2 months, have it come out every month for next 2 years, and wow, payment history using an unsecured. So in case if you don't have the funds, see if you can get an unsecured loan. Yes, rates may not be the best, but again, you're trying to build credit, so it does take a little bit of money for you to throw at it in order for you to get it to grow. Overall, I definitely wasn't like the worst advice. I just wish he would have touched more and gone into a little bit more depth and talked more about the eligibility, because he didn't go over the underwriting criterias, which is very important. Because again, if he's going to give you advice on this type of loan, he has to be able to give you advice also on how to get approved for this advice. And again, yeah, I'm pretty sure he's not an underwriter at Navy Federal, because I think he would have stated. But yeah, it's like that's just something. Let me see. I have a feeling about this. Let's see. Disclaimer. This video is for entertainment purposes. I am not a legal or financial expert or have any authority to give legal or financial advice. That is something that I catch so hilarious that I see with a lot of um people that are YouTubers that do financial advice. They always give this disclaimer. I'm about it to relieve themselves of the liability. This is how I know that they're not serious, and if they're taken to court, that they can hold it down. Because again, they don't have the experience. So this is crazy. But yeah. Yeah, that's pretty much it. Let's go ahead and hop on to the next video.